Hello and welcome to this Money Control live stream, the closing bell with me Yatin Mota and my colleague
Santosh Nair.
Santosh Nair, Santo as they tell. And Santo, new look, right? You look more like Sangakkara. Are you there for the IPL audition?
Yeah, I think, well, thank you for the compliment first up. Yes, I would say that this is some kind of gearing up for IPL.
Gearing up for IPL, but talking about the markets, which is our core focus area, today on intraday note, we saw some huge volatility coming in. Obviously, the Israel-Iran volatility, the kind of missile attacks which was spoken about in media, caused an initial knee-jerk reaction on the benchmark indices with a gap down of nearly 250 points on the Nifty. But we had a smart intraday recovery of over 400 points. And leading that were banks as well as metal stocks. If you look at the Nifty, it ended at 22,150. So we are now well above the 22,000 mark, and Sensex also gaining by nearly 600 points. Most importantly, if you look at the Nifty gainers, we had a whole host of stocks, especially the likes of Bajaj Finance, HDFC Bank leading, along with stocks in the auto space like M&M and Maruti. All of these stocks are gaining anywhere between 2 to 2.5%. Obviously, post the earnings, Bajaj Auto, that stock was down nearly 2.5%. HCL Technologies, TCS, Infosys, all of the IT stocks languished, lower by nearly 0.5% to 1%. Clearly, Infosys' guidance cut did not augur well for the IT stocks. In the mid-cap space, a lot of stocks moving. We had the likes of Elecon Engineering reacting to the numbers. Stock was up 10%. Motilal Oswal, after they announced that the board will consider a bonus issue, that stock gained 7%. RK Forging, and mind you, that stock has been in the news because now they will be supplying components to Tesla in the US. Post with the stock moved 6% higher in trade today again. Tata Communications down 5%. Schneider, Suzlon, all of these stocks struggling in trade. But Santo, clearly right now in the shorter term, we have seen a lot of volatility in commodities, oil, equities because of the Iran-Israel issue.
Clearly, Yatin, but despite all these odds, it was quite a strong comeback, and that was very surprising indeed. But at this point, Yatin, as you've also made a reference to it, I think the bigger worry for the market seems to be that commodity prices have begun to inch up again. Now, what kind of impact they're likely to have on earnings and also on demand going forward, I think that is something that will have to be looked in. But there also remains the question of expensive valuation. I think that's what people in the market are saying right now, that if you buy at these prices, how much returns can you expect to make in the short term? I think that's the bigger worry for the market right now.
And I think, the interest rates also, Santo, the US yields moving above 4.5, gold moving to record, I also create some nervousness among equity investors. But nevertheless, Santo, the top gainer in trade today was HDFC Bank. Tomorrow they will come out with the earnings. So ahead of the earnings, stock looked good. In fact, the quarterly update was strong. But when it comes to the preview, let's see what the market is expecting. Now, if you look at the Motilal Oswal expectations, the net interest income is expected to rise close to 25% year on year to a level of 29,000 crores odd. Profit also seen above 15,500 crores. Obviously, there could be a gain because of sale of a subsidiary. That stake sale could garner 6,500, 7,000 crores kind of a gain. So we'll watch out for that one. Deposit growth in Q4 was nearly 26% year on year. Loan growth was 55%, and the asset quality is more or less expected to remain stable on a sequential basis. Obviously, the management commentary on the net interest margins, the trajectory of the deposit growth, because the markets now, instead of focusing on asset quality, which in an upcycle doesn't really worry banks, but the kind of deposit mobilization that HDFC Bank could be able to do in the next 2-3 quarters probably determines the stock price performance in the near term. And most importantly, the management commentary on the branch addition plans, the operating expenditure, the credit cost is something that the street will be watching out for. Santo, given the fact that HDFC Bank has done really nothing in terms of returns for the past 2-3 quarters, do you think this would be a make and break kind of a result?
Well, hard to say, Yatin. Yet you rightly said that the stock has gone nowhere. But still, if you ask investors, fund managers, they're still betting on a kind of a turnaround.
Right.
And the expectations are still running very high. At the same time, you're not seeing enough support coming from foreign institutional investors, which is the chatter that I've been picking up. So clearly, you have very bullish domestic investors, but not so enthusiastic foreign investors, and I think that's the tug of war that seems to be playing. And once again, HDFC Bank seems to be a prisoner of its own high benchmarks.
Correct.
The numbers are pretty good. There's nothing really wrong with the numbers as such. However, the market just doesn't seem to think that it's good enough for someone with HDFC Bank's track record. So it will be interesting to see how the market reacts to this this set of numbers, because the previous in the ADR market also the ADRs had jumped immediately after the bank had given its fourth quarter update, but it failed to sustain. So now the market already knows that the numbers are going to be good thanks to the fourth quarter update that the bank gave some days back. So it will be interesting to see how this thing plays out.
Absolutely, 2.5% higher for that one. With that, Santo will also discuss one of the stocks to focus on.
Well, Bajaj Auto is my stock for the day. The stock was under selling pressure today. Good set of fourth quarter numbers, but most analysts appear to be negative on the stock. At least the CLSA and Citi have come out with sell ratings on the stock. The numbers were quite good. Revenue was ahead of what market was expecting. Realizations too were good because the product mix was good, and CLSA feels that Bajaj Auto could actually increase its market share in the motorcycle segment this year. Also that its exports will start to look up. But the big problem right now for the stock is that most of the good news already seem to have been factored in. The stock has almost doubled over the last 1 year. So both CLSA and Citi feel that gains could be a little more gradual from these levels. Also, Citi is not very convinced about the recovery in exports now. The weakness in export is also one of the things that's been weighing on the stock for a while. But while CLSA sees exports gradually picking up, while CLSA expects this year to be good for exports, it's projected a mid-single-digit growth in volumes, but Citi is not so optimistic. Besides, there's also the other point that from the management commentary, they made it clear that because of the reduction in subsidies for electric vehicles, the two-wheeler electric vehicles growth may not be as great. There could be some disruption on that front, and also that the previous year was quite good for three-wheeler sales. Now on that high base, repeating the same performance may not be all that possible. Stock is quoting at close to about 30 times trailing 12-month earnings, which most analysts feel is pretty much a reasonable valuation. So big gains from these levels look unlikely. Both CLSA and Citi, in fact, while they have rated the stock a sell, they upgraded their price targets a little bit, but the price targets are still way below, less than 7,000 rupees, while the stock is already quoting above 8,000 rupees. So this stock could probably see some pressure in the short term.
Absolutely, and Santo, this is one of the stocks which is still quite higher than the 10-year average valuations. Obviously, the tailwind remains. The domestic volumes are great, but the headwinds still are in the African countries, where the geopolitical issues are clearly weighing on their export volumes.
One more point here I would like to add, Yatin. When you now start looking at stocks over very long horizons, I'm saying 20-25 years. There were phases when people had written Bajaj Auto off.
Yeah.
I myself noticed that quite a few times in my career when people would say that there's no future really for this stock, but now look at the way the stock has performed. Absolutely. So ultimately the blue chips are blue chips for a good reason.
Absolutely, and talking about Infosys, that is also one of the blue chips which failed to perform in the fourth quarter. Obviously, the guidance cut was quite disappointing, given the fact that the guidance was cut from the earlier band of 2 to 6% growth to now a 1 to 3% kind of a range. Infosys fourth quarter numbers missed estimates. Obviously, there was one-off in which they had revised some contractual obligations with their clients, post which there was an adjustment in the earnings. But adjusting for that as well as the guidance, most of the brokerages have cut the target price on the stock by almost 100 to 150 rupees per share. Obviously, if you look at Jefferies, they have a buy rating. However, the target has been cut to a level of 1630. JP Morgan also, is wary of the near term. But the silver lining, according to Jefferies, for Infosys could be the strong deal wins, which provide comfort to their expectations of a 9% EPS CAGR over the next 2 to 3 financial years. Obviously, the JP Morgan analyst also believes that the cyclical recovery and dividend buyback yield also remain a strong support zone for the share price. Of course, after opening 2.5-3% lower, the share of Infosys almost recovered intraday, and the losses were only 0.5% till end of the day. So yes, at lower levels there has been some buying which has emerged, but do remember the stock has already corrected nearly 300-400 rupees from the recent highs, which probably comforts analysts, and most of them say that the price is already factoring in a few weak quarters, post which a cyclical recovery could be in sight.
Also, in the case of Infosys, we have noticed in the past that whenever the quarterly numbers disappoint, there's a sharp reaction. But if you were to buy in that fall, at least on a short-term basis, you tend to make some money on it. Although this is the second time in the last 3 quarters that again Infosys numbers have kind of disappointed. In the second quarter also we had seen some kind of a similar disappointment. So if you're looking to play the short-term game, I think always this kind of sharp adverse reaction looks like a good opportunity to get in. Well,
is it a good opportunity for Voltas, because that is your next stock? We are already facing heat waves, Santo. How does it help Voltas?
So, Voltas' fourth quarter update was pretty strong. The company said that it has sold a record 2 million units in FY24, and volumes are up about 35%. Now, that's the good news. Also, that we are seeing a strong heat wave across the country that is in general helping all AC companies. You've seen a good run up in shares of other AC companies also, notably Blue Star. But the catch here for Voltas also is that its margins have been under pressure for quite some time now. While the sales have been pretty good, the market will also be looking at how well the company has been able to defend its margin, because if the volume sales have come at the expense of margins, I don't think market is going to be very excited. Although the stock has given a fairly good return over the last 6 months. It had fallen to around 740-750 levels, and from there it's rallied to close to about 1300 levels. Right now, sentiment for AC stocks in general is quite upbeat because of the heat wave that we are seeing across the country.
Absolutely, Santo. I think in the last quarter after result, the shares hit 52-week lows, and now is Voltas from levels of 8,900 now 1,300. So in the last 1 quarter itself, there has been a huge amount of return that already is factoring in a good season for Voltas. But with that, it's a wrap on Moneycontrol's closing bell. Do join us on Monday for opening bell at 9 a.m. Obviously, you need to enjoy your weekend and stay away from geopolitical news, because that is not harming the Indian markets anymore. We hope to see a good rally in the next week. Stay tuned to Moneycontrol for all your news and updates.
Have a nice weekend.